Hey everyone, welcome online, and thanks a lot for tuning in on your Friday night. I've got some interesting topics to talk about today, and I wanted to hop online more urgently than not, and I've been trying to find the time to be able to do that, and been meaning to do a live every day this week, but I thought I'd book in for an impromptu Friday night chat with Birchie, and just looking at what is happening out there in the marketplace. So I can see a lot of you guys are hopping online now, and there doesn't seem to be too many people hopping online, and I think it might be something to do with my disclaimer out there, but anyway, we'll see how we go. I'm going to get straight into it. There's a few news articles that I want to talk about. Most specifically, I've had a lot of people questioning me just on a news article that came out the other day, which is Josh Frydenberg gives financial regulators green light to high debt home loans clampdown. So a few people have been asking me about that. And then I've got about another half a dozen different articles about what's happening out there. So what I might do, this one here is going to be the topic of discussion today. It is a very, very big and important news article. We're going to see clampdown on loans. I want to talk about how this will affect, what it means for you. And I've actually got a list of notes here, so I'm going to keep it very to schedule this evening. But I'm just going to leave this one for now, and we'll come back to it shortly and get into some fun news before we do. So the first article that I've got here is an article here from Daily Mail. Who cares about Daily Mail? They're a bunch of knobs over there. But there's this article here from JP Morgan. It says JP Morgan boss Jamie Dimon says the bank is preparing for a potential catastrophic federal default on October the 18th if Congress fails to raise the debt ceiling while passing Biden's $3.5 trillion spending bill, right? So on one hand, we've got here an article about the financial regulators stopping home loans. On another article over here, we've got a bank saying that the economy will completely collapse if they don't get more funding. But in the same sentence, it says Biden has just released $3.5 trillion worth of spending. So on the October the 18th, there's a bit of volatility out there in the markets at the moment, because in October the 18th, there will be a standstill if Biden doesn't agree to certain terms and they can't pass some bills through Parliament. There will be no money left over in the US economy. They need to get a loan. So this debt Ponzi scheme that I've been talking about for a very, very long time is coming home to roost, and there's so many cool things happening with it. My thoughts on this article here is that it is great. We can see in the same sentence they're going to have a catastrophic collapse if we don't see more money printed. But on the same day as money being printed, we've got $3.5 trillion getting passed. So it's very interesting what's happening out there. The governments around the world are covered in debt. They can't print no debt no more. They're just printed. It does nothing. It's like they're printing out this currency and it's just evaporating into the oblivion. So be aware, October the 18th could be some volatility out there in the paper markets. These are all debt articles today, actually. It's really cool. They're all different things about debt all around the world. This one here is an article from the Sydney Morning Herald. Contagion worries as Chinese property developer Sinks by 87%. Cynic Holdings Group has halted trading after an 87% slump in its shares on Monday afternoon. The Shanghai-based developer didn't have any reason for the trading halt in Hong Kong. The sudden sell-off in the last 2 hours leading up to the suspension was accompanied by a surge in trading volume that was about 14 times its average in the past year. The company has 9.5%, 246 million or 340 million in Aussie bond due on October the 18th, and Fitch Ratings revised its outlook to negative last week. The Monday share plunge slashed its market value to just under 230 million, which is tiny for a listed developer in the city. An officer at the firm's Hong Kong office said there is no one to attend to media inquiries. Surprise, surprise. That's really interesting, right? This company collapsed by 87%. 87%. It's one of the largest property development companies in China, and it collapsed 87% in a day. And it's interesting. We've got a date here, which is October 18th. And, it's interesting when you see dates. There's a date that's, what's the date? It's the October 11th, which is Freedom Day. It's also the day that the New South Wales title government changes titles and goes completely digital. Here we have October 18th. We just saw the last article, which said that we would see an issue in the US on the 18th due to bonds. And here we see in China bonds that are guess what date it was? October 18th. So we're at a point where we're going to start seeing all this dog shit paper asset Ponzi scheme wealth get removed from everybody's accounts. So be prepared. We're going to see. I said last year, we've got these things called zombie companies. You can't have these companies running off nothing, right? These companies are scams. That's the best way to say it, is that there are scams out there, and they're ruling the world, but everyone's investing their money, they're going up, they're doing great things, but they're backed by nothing. So we will soon see the outcome from that. The next article, debt. It's a debt bomb here, right? Evergrande. For those of you that didn't watch me last time, I know it's Evergrande, but Evergrande is more fitting. Chinese property giant misses another payment deadline. This is an article from 19 hours ago. So this is today's news. So last time we saw that Evergrande couldn't pay its bills, and here we are today with Evergrande can't pay its bills. The hugely indebted Chinese property giant Evergrande has missed interest payments to overseas investors for the second time in a week. Evergrande was due to pay a foreign bondholders $47.5 million by Wednesday, but the bondholders told Reuters or whatever you're going to call it, news agency, and Bloomberg, Reuters, that they were yet to receive any payment. Under agreements with investors, the company has a 30-day grace period before the missed payments officially become a default. Evergrande has not commented publicly on the issue. Once China's top-selling developer and company now faces debts of more than $300 billion. $300 billion, right? We've got debt here, we've got debt there, right? All the articles that I'm throwing off my desk, they're all debt. Every country, every government, everything in this world is owned by debt. No one has money. People don't have money. They don't have currency. It's been stolen from them. And that is why everyone feels wealthy, but they're not actually wealthy. So once again, tonight I'm going to be talking about this article, and this has been put on many different news outlets, talking about how the financial regulators are going to clamp down on home loans. And we'll be going through that article, my notes, my thoughts on the market this evening, because it's going to be a really cool topic. The energy crisis weakening havoc across the globe. Wow, what have we done? We've used up all the oil. We've used up all the precious minerals in the ground. We've used up all the resources. No, right? My aircon's going. My power supply is connected to this laptop. Your fridge is going at home watching this. We still have power. There's still power out there, but there's issues getting these commodities traveling around the world. And why? It's because we're in a financial crisis. I said going back 5 years ago that would have a thing called a GFD, the Global Financial Depression. It's not the GFC, it's a depression, and it's of biblical proportions. Most people out there are having medical procedures now, right? And I'm not even going to get into that, but that is of biblical proportions. And here we are with a depression, right? A depression means that your lifestyle isn't as great as what it was once before. Let's read this article. The UK's chaotic fuel crisis has a number of homegrown elements, but underlying them is an increasing global energy crunch. It's an energy crunch now. We had a medical issue beforehand. As I say certain words, I look and see if people are missing and people getting tuned out of this video. But anyway, now we're going into the energy cycle. So we've got here in the UK there are dire shortages of petrol and diesel. Major industries are closing after drastic disruptions to transport deliveries. Petrol stations are being shut down. Energy retailers are collapsing. Energy costs are soaring. The public is panicking. Birchie has been telling everybody on his webinars, to make sure that you have food, you have water, you have energy, you have resources. It's important because we're going to see this happen. This is a financial collapse. People will feel richer, people will feel poorer, people will get scared. And a lot of people are going to get fucking really scared now because I'm going to be talking about this article. Do I look scared? I'm happy as fuck. So let's keep watching. Let's go. I don't know if you want to read the rest of this article. I might be sending you to sleep by reading it. So read it yourself, but you get the message from these articles that now there's an energy issue. Here we are. Which country is this one from? It's basically the same thing. Right, my screen's gone missing. Just gonna go back and have a thing about emails pop up. Petrol driver shortage, no improvement in supply, says retailers. So what are they blaming it on here? There has been no improvement in petrol supplies at independent petrol stations since Wednesday, according to industry body Petrol Retailers Association. The PRA, which represents independent fuel chains, says more than a quarter or 27% of its members are still out of the fuel on Thursday. That was better than the 37% that were out of fuel on Tuesday, but the demand remained higher than usual. Why is there so much demand, right? People have been locked in their houses around the world, right? People are not traveling as much as they are. Are people traveling more? Why is there such a shortage? Is there a shortage because people don't want to sell their commodities, being their petrol, their energy, their coal? Do I want to sell my coal? If I was earning coal, do I want to be selling that when I'm going to be getting cash and that cash has got no value, right? We are starting to see very, very interesting signs of the hyperinflation. I said the hyperinflation wouldn't occur immediately. We'd see it slowly creep up on us. And it's reading the next article that I got here. So I feel like I'm missing something. We're seeing hyperinflation start to occur. They're going to try and control this. They're going to try and manipulate it. They're going to try and save things as much as they can. If you got money, it's stupid. If you got assets, it's good. If you're too over leveraged, you could get wiped out. If you're too under leveraged, you're most likely going to get wiped out. You need to have a solid plan. Here's an article from the ABC. Hong Kong anti-doxing law passes, sparking concerns it could be used to stifle dissent. So we go on and read. Hong Kong's legislature has passed a privacy law tackling doxing, the public release information identifying an individual or an organisation that critics say could be used to protect those in power and target a civil society. Supporters say the legislation is long overdue to counter a problem festering since the city's 2019 mass pro-democracy protest. Why does that date ring familiar? Before everyone has been forced to get inoculated, before everyone locked themselves in their house, before they blamed a certain issue out there, there was a financial crisis that was brewing. Now it's being censored. Now everything's being wiped up. Now everything's being hidden. Some offices, home addresses and children's schools were exposed by any government protesters, leading to threats. But some technology companies are concerned the legislation is so broad and vague it could hamper operations in Hong Kong. Human rights and pro-democracy groups fear it could be used to crack down on dissent. This is to fight doxing behaviour that divides society as early as possible. Constitutional and Mainland Affairs Secretary Eric Tsang said the Legislative Council, which has no opposition party. The law empowers the Office of the Privacy Commissioner and personal data investigate and prosecute doxing. Violators include anyone who discloses an individual's personal data without consent, with an intent to cause specified harm or being reckless. Violators could face fines of up to $1 million in Hong Kong, which is $178,000 here, and 5 years in prison. So we're seeing unrest around the world. We're seeing financial markets collapse. We're seeing inability to get supplies, inability to trade, inability to work in a free society. Where just having a look here at some of your questions. I'm going to get into my very important topic of discussion today. I'm going to try and keep today's live very condensed because I've got a very specific talk today. Just checking into your messages. Andrea, I hope you're doing well. It's a nice surprise. Ryan, you're back in Sydney. Yes, I am. Just visiting and in my office, have to be for work, and I've got to go back home wherever my spirit may rest of a night time, which is inside my body. Vic, do you think interest rates will go up? If so, how much and when? Your thoughts, please. I've spoken about that very much, so it's going to be a topic of discussion, and this is going to be what I talk about. Mahesh, seems like you've lost some weight. I've been walking about maybe 40 kilometers some days and 20 other days. I cut my hair myself, which I think I did the right job. It's growing back now. It's great. Uranium being stockpiled by investors. The worst investment you could have today is cash, right? If you have $1,000 in the bank last year, you can't buy what you could last year. If you have $1,000 in the bank today, you probably won't be able to buy the same stuff you can today in a month's time. Everything is rising at a tremendous, tremendous rate. It's all because of the fraud of the financial system that we have. We're going to see our currency crash. I've talked about it many times over the last few years, and we're in the early stages of it still. We're still very early to the party, but they're going to try and do anything they can to prolong, delay, and take as much as they can from this system. So I think we're heading into the next chapter of this collapse, crash, depression. A recession should last 6 months. That's the definition of a recession, right? If you go back to the recession of the early 90s or any other recessions around the world, they may last for a year, 2 years, whatever. But we've been in a recession since 2016, and people haven't realized that. And we've tried to print our way over the recession. Who did that? It was the central banks. It wasn't the baby boomers. It wasn't the first homeowners, because they're so selfish they want to get some bread with avocado put on it. Who makes up all these things? The media used to like talking to me. They still do, but I just can't, go on TV and, have them go in a debate. Is it Liberal versus Labor? Is it, the Boomers versus Gen Y? Is it all this? Because it's all a fucking scam, and it's all a scam, and I can't sit through that shit because no one talks about the truth. So that's why I just do stuff like these live. But this week, there's been a movement, and it's a chess piece, right? People are asking about, will we see interest rates go up? They cannot, they will not put up the interest rates. They cannot put up the interest rates on anything, right? People can't even pay their fucking interest rates. How many mortgages are on hold at the moment? How many people have put their mortgages on mortgage holidays or the mortgage moratoriums? This is happening all around the world. Imagine people aren't paying their mortgage, and then they put the interest rate up by 0.25% or 0.5% or 1%. Right? People ask me, if interest rates going to go up? Let me tell you, it's never going to go up, right? Interest rates have not gone up since 2010. Do your research, go and check out the RBA minutes. You'll see at the RBA, the last rate hike was in 2010. That was 11 years ago. Are we going to see them go up again? No. I said that we could possibly see interest rates go up by 0.25% if they were to go up. They will try and stop runaway inflation. They have a very big problem. We've got $1 trillion of debt as a nation. We've got all these companies that I've just thrown in the articles around, which these companies have got trillions of dollars worth of debt, hundreds of billions of dollars worth of debt. They're all going bankrupt because they can't even pay their debt that they've got. So if they push the interest rates up, everyone's going to die. So they've got to try and control the amount of currency floating around in circulation. How could they do that? They could stop stimulus checks, right? But let's see them stop JobKeeper and JobSeeker and JobSaver, because over half the companies out there are stuck on cheap, easy credit. And, that's what it is. The whole market is made up of a big Ponzi scheme of currency creation. People feel richer, but they're really getting poorer because they can't do shit with their money, because it's the end of this currency system. So we will see movements in the markets over the years, right? I think that this next decade is going to be very, very exciting, and I've never been so happy in my life. People are like, we're in a property boom. Will the property market keep going up? Will we see the market double? When's it going to crash? Are we in a bubble? All that sort of stuff. The whole property market is a Ponzi scheme just as much as the share market is. If interest rates weren't 2% at the bank or 3% at the bank, people would all be bankrupt. The properties would never have been able to go up. So they're at a very interesting point. Now, this article is almost identical to what happened in 2016 and 2017. I'm going to read it out because it's important. I read the whole article. Josh Frydenberg gives the financial regulators green light to high debt home loans clamp down. Doesn't even make sense. Josh Frydenberg gives financial regulators green light to high debt home loans clamp down. Maybe they can get better writing. A major crackdown for home loans is on the cards to stop a growing problem caused by historically low interest rates and surging property prices. Wow, they actually told the truth for once. There we go. More than 1 in 5 home buyers are borrowing more than 6 times their income, prompting the Treasurer to consider stepping in. To consider stepping in. Does he mean that he's going to? It says to consider, just like the Royal Commission, which did nothing. Josh Frydenberg has met with financial regulators to discuss the hot housing market and given them the go-ahead to consider clamping down on high debt home loans in order to minimise risks caused by historically low interest rates and surging property prices. Because we all know that the properties go up because of debt and currency creation. Regulators could announce within the coming weeks or months new limits to high debt loans as concerns about the amount of debt being taken on by lenders increases. In the June quarter, the number of residential mortgages where debt was at least 6 times greater than income jumped 21.9%, up from 16% in the same quarter last year. Just remembering, think about all those companies that you've seen around the world, which are, the Evergrenades and that Cynic and all those companies that are collapsing due to the high amounts of debt, the copious amounts of debt. Imagine if the banks all collapsed, right? I reckon that one day, this is my thoughts going back about 5 years ago, I put in a mentoring program. So those of you that watched it and were a part of my mentoring program going back a few years ago, you would have remembered me saying that at the end of this, when things start to really collapse, the central bank will come in and bail out the banks and buy the loan books off the banks. The banks' loan books will be purchased from them. But anyway, it's just interesting to think everyone that's going to go bankrupt in this. So the reason why I'm so cocky about it, the reason why I'm so happy about it, the reason why I'm so laughy about it is it's the ultimate fucking checkmate, right? It's the biggest checkmate that we can see around, and it's great. The jump has prompted concerns some borrowers could fail to meet the home loan repayments if interest rates rise or they lose their jobs. If interest rates rose by 1%, everybody, everyone would go bust anyway. Like some of you that are, you go, oh, it'll be easy to pay my debt. But the whole system would collapse. If the property market got affected, right, if everyone wasn't using their house as a big credit card, right? People are going out there like, oh, my house has gone up from 700 grand to 800 grand to 900 grand, it's up to $1 million. Let's pull out some capital and go buy a car that's overpriced. Let's go and buy whatever it is. We need to pull out equity. If they can't, well, then people aren't going to eat, right? The property market is incestuously tied to this Ponzi scheme. So they're going to keep needing this to go along. But they're trying to be responsible and, pull things back. Mr. Frydenberg said a positive feature of this housing boom compared to the last was the high proportion of first home buyers and owner-occupiers entering the market. But risk assessment, that's good because there's less investors, meaning that I can jack my friggin' rents up, which is great. Thanks. With Australia's economy well positioned to strongly recover as restriction ease, it is important to continuously assess the appropriateness of our macroprudential settings. Last Friday, I joined the Council of Financial Regulators to discuss a range of issues, including the state of the housing market, with a particular focus on both the Australian Prudential Regulation Authority, which is APRA, and the RBA. We must be mindful of the balance between credit and income growth to prevent the build-up of financial future risks to the financial system. Carefully targeted and timely adjustments are sometimes necessary. There are a range of tools to APRA to deliver this outcome. The Council of Financial Regulators will publish their next quarterly statement on Wednesday. So what are they going to do? They can't push up interest rates. Push up interest rates. Do the right thing. Put interest rates up. I beg the central banks around the world to push the interest rates up. They can't, because the system is screwed, right? Everybody would go bankrupt, which is funny, right? I'd love it if we go around and pick up stuff cheap. But they're trying to control the market, and they're trying to do it via restricting lending. But what would be the outcome of that? And I've got here a great list of bullet points to share with you as to, will we go into a property recession or a crash, or are we going to see things go as they are? And some feedback about the past. And when I say the past, I just mean maybe 2, 3, 4, 5, 6 years ago. A lot of people forget what their life was like 2 years ago or 3 years ago. But it's I've got a good memory. I remember all this shit, right? And it's statistical, it's factual, and it's out there. So, question I ask is, if you were to see a property crash, would you be prepared? That's the first thing, right? If we saw the property market crash, how would you protect yourself? Are you overexposed? Have you got your finances set up? Have you got your equity out? Are you going to be buying? Are you going to be able to buy? So there's some things that you should always be thinking about, just common sense. But I've said quite a few times that we could see the interest rates go up by 0.25%. I use the word could, and I said it was only about a 5% chance, but they will try to stop inflation as much as they can by doing something. They can't put interest rates up by 0.25%. If they put the interest rate up by 0.5%, everybody's already died. I read all those articles. All the companies around the country and the world are dying. And all these companies that are dying, if we put interest rates up, kaboom. Everybody that's bought their house on 300 square meters with no EVE for $1.2 million on 120 grand a year, they would die, right? So we're not going to see interest rates go up. They can control it by stopping the amount of money that people can borrow, which in effect would impact the property market, and we would see some form of a property crash. But where would the property crash occur? Would it occur flatline? People say to me all the time, Nathan, where's the market going up? Are we going to see the property market go up? Everything's gone up. I can't buy anything. It's like, well, not everything has, right? If you think back in 2003 and 2001 and 1999 and 2008, and if you're around and you were born and you saw what happened, or you could go to your parents, your uncle, your auntie, your grandparents, whatever it is, and try and get a bit of understanding of what happened in those times. We saw a property boom in Sydney where the market had gone catastrophic until 2003. And the market in Sydney, let's just use Western Sydney. I can see Michael's here. His hometown of Shelby. Hope you're doing well, mate. Out in Shelby, a house in 99 would have been about $60,000. In 2003, the market peaked and the property went to about $300,000. And then the market crashed and went down to about $200,000. And in about 2007, it hit its bottom. And then as the GFC, global financial crisis, came through, they dropped interest rates from 7.25% at the RBA all the way down to 3%. Good on them. They caused a new property boom, dropping it by 66%. We saw the property market take off, and by about 2011, the property in Shelby would have been worth 300 grand, where it was worth 300 grand 8 years prior. People would have said that was a shit investment, all that sort of stuff, but without knowing what happened in the market, you couldn't prognosticate or reverse engineer what had occurred. If you look forward from 2011 to about 2016, that probably went up to about $500,000, and that's where it topped out. And then APRA came out and they stopped lending in about 2016, and those properties came back, and you could have picked up one of those things for maybe $400,000. So yes, we did see a property correction in 2018, 17, and 19. And then what happened? We saw a invisible enemy, which came out, and everybody had to band together and had to print out all this money, and now we've seen a new boom. And we've got this boom, and I actually sent a picture of one of these properties in Shelby to my ex-business partner Daniel the other day. I said, do you remember when people used to laugh at us buying this stuff, and they said we're shit and we're going to be idiots and we're going to get bankrupt, and we're buying them for $150,000? They're now $900,000 out there. Like, what dickhead would pay this? But people are paying it. But anyway, if the interest rates hadn't gone down to 2%, these people wouldn't be able to pay for it. If certain things hadn't occurred, these things wouldn't have happened. Interesting to see that the market crashed in Sydney in 2003 to 2004, but Brisbane and Gold Coast doubled and tripled. I know areas in Brisbane that had gone up from 60,000 to 250,000 while Sydney was dying, right? And then when the Sydney market was taking off, the Queensland market, the Gold Coast, was shit. I had people laughing at me for the last 10 years saying, Nathan, you're buying in the Gold Coast, that's shit. You're not going to make money. These properties never go up. I had investors that I helped out, people that could be watching this today that got scared and they sold off their properties, and now they've doubled. Did you care to take your property through that market cycle, or you just looked at a year or 2 years in front of you, right? That's the question you need to be asking. So the markets don't always go up linear, right? They don't go up in one direction. We saw a mining boom occur in 2008, 9, 10, maybe 2007, 8, 9, 10. Why did the mining boom occur? Commodity prices rose. We printed a lot of money. Commodities spiked up. But at the same time, we saw other markets crash. So while Sydney was going up, I know some markets that were selling for $500,000 go down to $50,000. Property markets are not linear. Just remember that. So what do I see happening here? All the people that got caught up, right, in this big bubble, Ponzi, debt-fueled orgy of cheap credit, they're going to be fine, right? But you're going to see some people that bought at the top of the market and they're going to buy blocks of land for $1 million with 300 square meters, and they build a little house with no eaves, and they spend $500,000 on it. They're in it for 1.5. They're going to be the people in trouble. The people that got all the stimulus packages from the government to be able to do it are going to be the ones in trouble. But at the same time, you've got people that are out there in the marketplace buying properties with credit at 3%, right? So let's just go back. You've got people that are at 1.5 mil. If they can't get the loan, then there's going to be a glut of people trying to get out because they've speculated in this market and not enough people to buy into that market. So we're going to see the top end come down. But what are we going to see in the market where people are playing at $200,000? We're going to see $200,000 property, and you put down a 20% deposit, which is only $40,000, which is very easy. That'd be the stamp duty for the other poor bastard. But anyway, you put down $40,000 deposit and you take out a loan of $160,000. $160,000 loan at 3% interest would be 160 times 1% is $1,600 a year. 1,600 times 3 would be $4,800. On a $160,000 loan on a $200,000 purchase, you'd be paying $4,800 a year at 3% interest rates. That's $95 a week. But at $95 a week, what sort of rent would you be getting? You could be getting $300 a week. So you're going to see people that can't afford the top end of the market, they'll be able to afford the bottom end of the market. So we're going to see some markets turn to shit and some markets go good. I like playing with bread and butter. That's my game. That's what's happening, right? There's been times where I've gone and bought $1 million properties. It's not my game today. There's times when I've gone and bought blocks of land to build houses. It's not my game today because that's not where you make your money. So yeah, I think that we're going to see a tremendous opportunity. There will be people that will see articles like this and they will get shit scared. People have been messaging me. That's why I wanted to make this Facebook Live. People have been messaging me saying, are we going to see a crash? We probably will in some areas, right? But then if we go back to 2016, let's say that we've seen that we could see a crash, right? The market crashed in 2016. Let's just pretend we're in Sydney, right? Everything had doubled. Everything had gone up triple. By the year of 2007 to 2016, 11 years had passed. The market had gone up so greatly. A property that was at 200,000 had gone up to 500,000, so it almost tripled. But people didn't see the 7 years beforehand where it turned to shit. People don't see that before this market just went up and got up 50% in a lot of areas, had been sitting shit, right? Those bust cycles, the property market popped in 2016 in Sydney, and it officially came out of that bear market in 2019 on the 4th of June when they dropped the interest rates. You might remember that I did a Facebook Live. If you've been watching me for long enough, if you haven't, go back through the old Facebook videos. On the 4th of June 2019, 19, I did a Facebook Live and the sun set and I just kept talking. You couldn't even see me by the end of it. It was more like a podcast. But it was important because that was the day of the boom started, right? And if you go and look at all the markets, they all took off because you had cheap, easy, readable, available credit. It's not that APRA took away their lending policies. It's just that interest rates came so cheap, people could afford to pay more and they could borrow more. So the Ponzi scheme existed and went further. I learned a lot of things back in 2016, 17, 18. Just as I learned a lot of things in 2020 and 21 by human psychology, by seeing how people behave and fight with each other on social media about who's getting the medical procedure and who's not, and wars and division between people. I learned a lot of things about it. I learned that a lot of people got shit scared back in 2017, 18. The market, you didn't notice the market crash, but it crashed in 2016. It was about 26th of September 2016 that the market really crashed. And the reason why I know that is because about a week ago I made a post and I said, this is the date it crashed. And I showed chats from my WhatsApp to other people, and I posted on Facebook, and it came up like 2 years ago, you posted this thing. But what happened was between 17, 18 and 19, people were getting scared. They were getting fearful. They could have bought a block of land for 300 and 400 grand. They sold it, didn't do anything with it. And now that thing's worth $1 million, they could have bought a unit for 200 grand and they got scared. They sold it for 220. They might have made a couple of dollars, but now that thing's worth 500. They got scared. They didn't take advantage of that market. They sold. They might be looking now going, I should be buying, right? And you're buying in because everything's hyped. You want to be buying when things are shit. I would love the market to crash, right? Will it crash? Who knows? But I do know that there will be repercussions of them controlling credit, because the only reason the market goes up is because you've got cheap, easy, available credit. And if they take that away, we're going to see a flow-on effect. But that doesn't mean that there won't be people playing in other areas. So what are my views? What are my take on what I'm seeing at the moment from talks like that? This is a given. I would have expected this to come out. And I did expect it. I expected it could have been in a tightening of credit, like we're seeing. We could have seen it in a 0.75% interest rate hikes, which we can't see. They can't increase interest rate. Every company's gone broke. Everyone's going broke. The country will go broke. The government will go broke. Everyone will go broke. So, yeah. The very important thing is if this occurs and this affects the market, how long would we go into a property winter cycle? I reckon it could be 12 months, 24 months. The impact, if they do this today, if they stop the properties from going up, we're going to see so much blood on the street, right? Some people are going to be really destroyed from that, right? Just from one little thing. They're going to have to reverse it like they did in 2016, which the ramification started in 2017. There was a 2-year bear market window and property was shit. But it wasn't all property, because some properties went tremendous in that period of time. I know people that bought properties for 50 grand that went up to 250 grand. They had 5 times their money in that period of 2 years, but we saw everybody in Sydney getting scared. So, yeah, there's some markets in Sydney which are still cheaper than what they were back in 2016, right? And I'm talking very good blue chip areas of Sydney, which you could pick up for $380,000 for a 2-bedroom unit that used to sell for $500,000 5 years ago. So if we see a correction due to this, they're going to have to try it for a little bit. It's like putting the brake on, but then they have to go and print more money. So if they do this, rest assured they're going to print even more money and create a bigger time bomb. But the thing that's different today than what it is in 2016 and 2007 is that we've just seen articles where people can't even get petrol. People can't get cars. People can't get food. No one wants to give their item away because they're going to get handed dog shit currency that's going to lose its value. So we're at a point now where it's checkmate, right? They can try all they want, but it's going to not stop it, right? We've got inflation. They're going to have to stop printing off stimulus checks. You've seen there the article that I read before, and I'm not going to go and get it because it's on the floor and, I just couldn't be bothered going to get it. But Joe Biden has printed off $3.5 trillion worth of, money that he's printed from nowhere, and he's enslaved the people of America to having to pay off. And they're still going to stop government because there's not enough money to pay the wages of all the federal workers. Right? And, we're looking at the world, we just need to keep printing this debt. So the thing that I'd be most concerned about if I was someone watching this or anyone out there is that you need to have assets, right? It's the asset that goes up and gets inflated away. It's the debt that gets devalued. So you want to take as much asset as you can and take it into the future. And when you take it in the future, the asset goes up because they're printing so much money. People will spend that money to buy the same asset and it'll push the price up, but the debt becomes irrelevant. So if you have high income assets with good equity built in, you've got a buffer from buying at below market value, then you're going to protect yourself along the way. But most importantly, if they tighten lending, right? And this is a funny thing that people don't realize is that if you sold your property in 2017 or 2018, you didn't lose out because you sold the property and didn't take the boom, right? That came afterwards. You sold the property and you weren't able to rebuy because you couldn't get the fucking debt, right? And that is going to be where most people get screwed up, because the debt is the key. You want to get access to the debt so you can attach more assets. If you don't have the capital, you can't buy the asset. So you need to have the debt, which comes in the format of the currency for it. If you can't purchase the assets, you're not going to be able to take them through the next market cycle. So if the market doesn't go up for 2 years, it's not the end of the world, right? You didn't see me go and sell all my properties because the market was going to taper off. I called the market that was going to crash going back 5 years ago, and I called it, right? And people said it was stupid for me talking about it. But was I actively buying? I bought heaps of shit. I continued to buy heaps of shit. And I'm happy about it. I did some calculations the other day after sending my mate Daniel the article, the property that was out in, there was two of them. There was one in Hebersham and there was one in Shelby, and they were like $850,000, $900,000 per property. And I was like, these are stupid. I sit there and think about the properties that I own out those areas, and I owe $100,000, $50,000, $150,000, and I bought them for $200,000 years ago. I went and put in the Excel spreadsheet, and my property portfolio had gone up to about 109 million. That's not including my motels and all the things I'm doing for that. So I don't have to do anything. My property's got up in value. If it comes down from 109 million down to 90 million, who gives a shit, right? Because I know in 5 years' time, when I print off more debt, people will not be able to build my size portfolio. So it's getting harder and harder for people to do that. So in this cycle, if we are starting to see a property downturn in the market, which I'm not saying that we will, but if we do, then people will not be able to buy the same assets anymore because they can't get the finance. This is what's causing the market to go backwards. So when the market does take off, are you going to be the people that bought the properties in 2017, 18 and 19 that were cheap and the market took off? Or are you going to be the person that got shit scared and they sold off their stuff and didn't take advantage of the boom? And we're at a point now where we're seeing, challenges out there in the market. Like we've seen countless amounts of companies go bankrupt. I think we're going to see a stock market crash, but I'm not your financial advisor, and that's not financial advice. Don't go and sell your shares because Nathan said to go sell them. I'm personally not invested in any of that. I like physical assets, whether it be the desk that I'm recording this from. I would not be able to buy this desk. Like my desk is massive. Like it's like probably 8 foot, 9 foot long. These cupboards are massive behind me. I think I paid about $1,600 for this desk brand new. It was maybe like 5 years ago. This desk would probably cost me $3,000, $4,000 now, right? I want to own assets. I'm an investor. I buy shit. The worst asset that I could see is cash. The best asset is any asset that's not cash, right? The even better asset is an asset that you've acquired that you don't have to pay for because you've got debt, which becomes irrelevant because that debt is cash, but it's not your cash, it's someone else's cash. So that cash will lose more and more of its value. So if we were to see a market downturn, would it affect investors? Are your interest rates going to go up? I don't believe so. If they did, they could go up maybe 0.25% or 0.75%. But if you can't afford to pay your mortgage and it goes up by 0.5%, then you're screwed already. So, and you probably couldn't get the debt level to be able to be in that position to start off with. So, do I think that we're going to see interest rates rise? No, but we could possibly. Um, yeah, I've got a few other notes here. I'm seeing lots of people messaging and all that sort of stuff. I want to cover off on a few little notes here, see if there's anything here I didn't say. So let's assume people can't buy properties, right? Let's assume that the debt ceiling gets capped. People can't afford to buy these properties because they can't get the cheap, easy, available credit because they just don't afford it. What would that mean? We're going to see more people coming in from overseas. We're going to see people fleeing from wherever they are to come to Australia. We're going to see our borders get smashed with immigrants coming through, which is going to be great for the economy. People will need to rent. So if you're an investor, your rents will most likely go up because it'd be harder for people to buy that shit. So you're going to be more people that are going to be renting. And they just said in the article before I threw it away that there's less investors buying in the market today. Investors have sold their properties to homeowners. Investors have sold their properties to first-home buyers and people that are living in the property. So there's less properties out there, which is great. I saw a thing here. I just got this letter in the mail. My mum gets a lot of mail, and I had some floating around in my car. And I saw this thing here. Not going to give anyone a promotion, but this says here. This is the article. It says, "Hi, quick question. Do you have any interest in selling your investment property in Nerang? I have a buyer that might be interested." I see so many idiots that have taken up these opportunities, right? There's so many people at the moment that are selling their properties. They're like, I bought a property for 200, it's worth 400, I better sell it, right? I better sell the property and make a profit. I've doubled my money, it's great, right? Cool. Sell your property, get some cash. What are you going to do with your cash? It's shit. It's worthless. But if you're putting your future and your financial future into a fucking handwritten letter from a real estate agent, which is being posted to you, that's marketing to you, fucking good luck with your financial advice, right? You should understand how things work. I've never heard anyone come to me, right? I do strategy sessions with investors every day. I do map sessions. I work with all of my investors. I have new investors come on board. Over probably about 8,000 people that I've spoken to on map sessions. Maybe, actually, I'd say about 10,000 people over the last 12 years doing map sessions constantly. I've never had anyone come to me and say, "Hey, Nathan, I bought a property in 2005 and I paid 200 grand for it and I sold it for 280,000 and I nearly made 50% profit on a property within a year. I sold it in 2006. I'm the greatest investor in the world." They come to me and they say, "Nathan, I wish I didn't sell shit back in the past. Nathan, I'm so pissed off I didn't buy more properties back in 2005. I wish I had have done it," right? So all those people out there that are selling their properties, good, keep selling them. People like me will buy them. People like my investors will buy them. We will take your properties and we will make profit out of them because the financial market is crashing and the only way they can get out of this is keep printing cheap debt. They might put a small hold on it, which might be 2 years of your life. But people are panicking. We've had 2 years of people locking themselves in the home. If you can't handle the bullying for that, go and get medical procedure, whatever. Make yourself happy. But people forget what the world was like 3 years ago. So when we get stuck into a property market boom, like we're seeing at the moment, people are like so happy. They're like, "Oh, wow, I just made so much money, blah, 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 blah." But when we're in a property downturn, people get so fearful and they will be pressured. They will be pressured to sell. They will be fearful, whatever the case may be. The strong hands go through that, right? My hands are fucking massive. They're like dinner plates. My head's massive too. But my hands, people go, "Wow, your hands are so big," right? So I've got strong hands. I will take whatever assets I can put in them. I will take whatever debt. I will hold on as much as I can to get through one market into another market into another market. So you will see changes, right? I've been investing for almost 20 years. I bought my first property in 2003. It's 18 years going into my 19th years of investing. And I have seen many different markets. I had to learn the hard way from opportunity cost. I have had fear. I don't have fear now. I just understand how things work very methodically, and I make decisions based on that. I know that we had this same sort of thing occur a couple of years ago, and it may occur right now where they take away some lending requirements. So if it was me, and I was an average investor out there, I would be going to the bank. I would be trying to pull out as much equity as I could. I would be having that equity sitting in my pocket because, people go, I'm going to pay off a mortgage. You pay off your mortgage and you go back to the bank and you say, can I have my money back? And they're like, no, you can't. You don't service for a loan. It's like, well, it was my money. I paid off my loan. Can I have it back? And they go, no, you paid off the loan. You can't get a loan now. You don't service the loan. So you have to beg to the bank. At all times, you should be looking to expand your capital position by getting as much equity as you can out of your properties. I'm going to get some water because I've been talking too much. So if it was me, pull out as much equity as I can, have it as powder in my bank account so I can do whatever I want. I would be trying to buy as many assets as I can whilst they are still cheap, because if the market does go soft, you might find some even cheaper ones. But are you going to find them in the affordable end of town? You're not. You're going to find them in the top end of town where people can't afford to buy those big end properties. So people that are stretching themselves really big on a certain property will affect them. The second part of where the issue lays for most investors is if you needed to buy 15 properties to retire on, and you need to go get the loans from the bank, if you can't get the loans for 15 properties and you can only get the loan for 6 properties, and 6 properties doesn't get you to retirement, well then it's going to screw up your retirement plan. So you need to look at that aspect as well. Whenever I can get access to capital, if someone's going to lend me some money, and I say the word someone because wherever I get the money from, I've used the banks. The banks are, I've taken all their money and they won't lend to me anymore. And I do deals that are very different. I get financing in all different unconventional ways that I do nowadays. So as I build my portfolio, it's very unconventional. I didn't go into certain property types and certain business types for unspecific reasons. They're part of my greater vision of what I'm trying to do as an individual, to build my own position and to be able to get to my $1 billion status. I make no hiding of it. I want to be a billionaire by 40, 36 now. Got lots of grey hairs coming through, especially that patch at the front. It's been growing more over the years and a bit of my chin. But by the age of 40, I want to be a billionaire. And I'm not going to be there by getting fearful of the market or not understanding how finance works or not understanding how debt works and not having a respect for assets over and cash flow rather than cash. People get scared and they're like, I want to have digits in my bank account. You can't. If you get let's say you buy your house for 500 grand, you sell it for $1 million, you get 500 grand, you put in your bank account, go to the bank and ask them, can I have my money? They won't give you your 500 grand. So if you think that you're so smart and you go and sell your asset, firstly, think back to what someone would be saying from 5 years ago, 10 years ago. We've seen recessions over the years. We've seen property market crashes. We've seen the market stall. We've seen the market go spluttering up and can't take off and get more, growth on it. Just think back at how those people were thinking on the day. What were they thinking? Why would someone sell their property for worthless pieces of plastic with dead criminals printed on? It was the dumbest thing you could ever do. I would never hand my assets away. Yeah. Are you going to be collecting the assets? Are you going to be handing yours away? Because if you want to hand your assets away, that's fine. Give me a call. You can call my office, 1300-367-925. And do you know how smoothly that came off my tongue? Give me a call. Give my office a call. I'll buy your property off you. I'll give you some terms on the property. I'll give you a term that's very attractive for you, right? Because I know that I'm taking a bet against you. The bank's taking a bet against you. You're taking a bet against the bank. The bank's taking a bet against the market, and certain things occur. So, looking at, where's the market going to be in 5 years' time? Inflation, right? If you think that the property market's going to fall, let's say the market crashes. Let's say the property market falls in half, right? Which it won't, but let's assume it did. Does that mean that your car's going to become any cheaper? The cars are going up more than ever. I'd have to buy a fleet of cars for my property management team. I need to go buy like 10 cheap little shit boxes. Last time I bought Mitsubishi Mirages and I paid $9,500 for 4 Mirages each. They're brand new. I think they registered them as demos and got their kickbacks and whatever, but it was fucking $9,500 for 4 Mitsubishi Mirages. It was like 6-7 years ago. I went and just looked at what's the cheapest car. It's an MG. The Mitsubishi Mirage is like 20 grand now. The MG is like 17 grand. That's for manual. You have to consider that some people don't drive that, so I need to get them all auto. But what are you going to be buying, right? So let's assume that the property market crashes. Does that mean the car's going to crash? Does that mean that everything else is going to crash? Let's look at it from all that sort of stuff. So yeah, with it, I can see a lot of people saying they don't teach me this in school. Sam said, where was this type of shit when I was in school? Well, it's the reality of it, right? Like here we are, we go to a 12-year indoctrination camp to become a good little obedient tax slave. We get taught how to, the bell goes off, you become obedient, shut up, don't ask questions, you get fed a whole pile of propaganda, fake history. History is called his story. So it's the victor that always tells that story, and it's really just an indoctrination camp to teach people how to fit into the system. And people go, I have to send my kids to school, etc. So, make the decision. If you don't like it, don't send your kids to school. Give them a better life. Teach them stuff a bit better than that. So, yeah, it's important to understand and respect that the system's around. And Pat from our office, our investor relations manager, said, stay in school, stay in the system. Exactly, right? You want to be trapped in the matrix? Go be a part of it. So, with it, that's my little thoughts on the market at the moment. I'm going to go through your questions. I'm going to maybe stay on for 5 more minutes and, just answer those questions. But I'm just going to have one last little look through here. So just to recap from the top, right? If you cannot get debt, right? If you cannot get debt, you can't get assets. If we have hyperinflation, if we have a high inflationary market and the markets take off and you don't hold cargo, you're going to be a loser, right? Because you're not going to be able to make up that market. You're not going to be able to get your hands onto the assets to go through that market. If you have cash in the bank and you can't do anything with it, then you're going to be a loser. So make sure that you be smart with how you take those actions through it. This phase of the market, as I said, we're going to see hyperinflation. We're already seeing it, right? I did a video on houses in Shelby, actually. It was a houses in Shelby video at the start of this year. And I said that houses at 600 grand go to $6 million, but people don't even realize it yet. And people laughed at me, but now we're looking at almost $1 million for a house commission house in Western Sydney. So this is just a dent in that market. It's a glitch. It's a speed hump, right? In that side. People might be getting paid from their 50 grand job today. They might be getting paid $1 million in 10 years' time. A cheeseburger might be $300,000. Your house might be worth $10 million. It's not a far-fetched fantasy world, right? Calculate the amount of capital that's sloshing around the system. See what would happen in each scenario if they were to disconnect the debt, if they were to print more debt, and you'll see that there's only 1 or 2 solutions out there, which is to keep printing this cash. The funniest part about it is that this is their only attempt that they've got to try and tighten the the property market, is by controlling the amount of debt that certain people can have. And if it wasn't, they should be able to push interest rates up. Push interest rates up, you'll have a fair market, but it's not, right? It's not a fair market, and it's all fake, and it's all Ponzi, and it's just the way it is. So I find it humorous because I see their weakness by the fact that all they've got as their tool in their kit. I'll pull my hand out like a little gun, bang, bang. It's the only tool that they've got to counteract the runaway inflation that we've got, is let's try and limit the amount of debt that people can have, which is control. If you understand how that banking system works and how the finance system works, then you're going to be able to clear the bank out and have all the capital, so you can go and buy yourself all the assets in the world that you want to have having, and be able to take advantage of these markets. So that's all I'm going to say on that side of things. Just backing up from this, I have a webinar next Wednesday. So the first Wednesday of every month I do a webinar. That webinar will be about finance, surprise, surprise, and it's not by chance. It was actually booked in the schedule for us to have chats with my whole finance team. So I'm going to be having, I think, maybe 5 or 10 of my finance staff on the webinar, maybe asking a few questions, hear about some of their stories, what they've been doing with other investors, talking about key points of how to take advantage of the market over the course of the next 12, 24 months as we go through this next level of the property cycle. So, with it, keep tuned for that. Make sure, if you want to know how to register for the webinar, go to our website, email our office, admin@binvested.com.au. I think there's a link. Maybe one of my team will post the link in the description box here, so you can click on the link, register your interest for the webinar. It's going to be really, really exciting for everyone. So I'm just going to run through some of your questions and go from there. Alessandro said, if the Commonwealth owns the land that you've paid your mortgage, is there a way to own the land legally? Look, you'll have lots of people talking about common law. There's a lot of people out there doing videos at the moment on places like BitChute and alternative sort of video outlets that will be talking about stuff that's more around common law. The way that the common law, the way that the land works is that the victor of the land, the winner of the land, fights it by guns and takes over the land. So the land has been fought and won, and the Queen owns the crown over the land, and she gets royalties from all the people that are contributing and playing on this land. In turn, there's Navy ships, and you don't think that the land is controlled by that? Why did we just go and do a deal to go and get more submarines and more tanks and all that sort of shit to protect this land that we set ourselves on? So we are only playing in a system. People think that, we can outsmart the system, we can fully have a land and all that sort of stuff. I want to have a physical paper title deed for my property. Do you think that a piece of paper is really going to control your property? Right? Property is won by war. You're playing in a system if you think that you own that. So I understand that we're living in the matrix. That's cool. I just want to know how to fucking own as much shit as I can whilst playing on that playing field. Because hopefully, maybe one day, if it's in my life, my children, my grandchildren's lifetime, that I need some water. That I'll be in a position, I'm building intergenerational wealth. I've said this many, many times over the years, that I used to build wealth for myself, but it's like, I'm just playing this shit for a game now. But how much, could you build an alternative system? Could you be able to control inside of that system? That's a really exciting part. So, Jason said, how are you? Are we in for a property crash? Watch the whole video. Alex said here, if you had committed to buy a long story and know that build prices are inflated, do you think there's a risk when the supplies on labour just continue to rise? No point trying to wait it out. I think that there's a lot of builders. There's actually builders out there that can't actually give you the price of building that property. It's going to have some more water. A lot of builders that will not quote on builds now. They'll just charge you along the way because the cost of inflation is pushing them up. There's builders going broke right now that I'm aware of, which can't afford to keep up with inflation. So if they cap this market, there's a potential that, there could be some half-built houses out there. There's certain things that could go wrong. It's all happening because of hyperinflation. So if we have any form of glitch in the market, right, if we have any form, just to recap on all those articles that I read at the start, the Evergrenade, the other ones that are out there that are in difficulty at the moment paying their debts and their mortgages, how will they survive this market? Because all those properties, all those assets, everything still sits there. There's going to have to be a bailout of some form. Someone's going to be printing more currency and bailing out that system. But as they print that currency and bail out the system, the real work didn't happen. So we won't see the real correction that we need to see. And we will see more currency sloshing around, which will then create even greater levels of inflation and create even greater problems out there. And this is what's been happening for the last 50 years of our currency system. And there's running out of levers to pull and things to do to fix that. So yeah, just two cents on that. If the intention is to crash the market, then raising interest rates would be a perfect tool. The Great Reset. Great Reset is great. The Great Reset, people will own nothing and be happy. They won't own shit because they can't afford it. There's no need to take people's stuff off them, right? They just can't afford it. So they'll be renting. And if you have the assets that people can rent off you, someone's going to be owning them. People are sitting out there saying, well, the Great Reset will occur and people won't be able to afford things because they'll crash the interest rates and push them all the way up. If they increase interest rates, the whole system implodes. So just remember how the system works and all the games they're playing, chess and checkers on top. If there's no table, they all lose their playing field. So, it's important. So the Great Reset will occur because hyperinflation, in my view, that is. And obviously time will tell and it'll be fun. Luke said, with the property prices skyrocketing at the current rate, would you recommend jumping into the market now or wait or hope for a crash to occur in the market? I would do neither of them because you can be waiting for a crash to occur and it just never happens. And if you're going to be buying into a heated, hyped up Ponzi scheme, well, then you're going to be adding a whole great deal of risk. When I'm buying assets, specifically at the moment, I want to be buying things below what they sold for previously. I want to be seeing value as to what I'm getting. So I always talk about buying things below market value, making sure there's upside for capital growth, and making sure there's strong cash flow. But my fourth and most important one, that's a new one that I add to the list, is buying assets that are below the rebuild cost and the cost of inflation. So if you can buy a property for say 200,000, you know that you can't build that property for 200,000. So there's a great risk minimization on that. I like buying things as a contrarian investor while they're on sale. So for me, a property crash would be amazing. I don't think we're going to see a property crash. I just think that some people are going to be caught out in shit markets, and there might be a bit of opportunity there, but those markets are probably already hyped up anyway, so I wouldn't want to go participate. I want to go buy stuff that's cheaper than what it costs to build, cheaper than what it may have sold for 10 or 15 or 20 years ago. Yes, it happens out there. Properties I'm buying today, I did maybe 6 or 7 deals for my investors that are, 50 grand, 80 grand, 100 grand cheaper than what they were 10 years ago, 15 years ago. And you might ask, how does that occur? And that occurs because not all markets are linear, and they don't all go up at the same time. And there's counter-cyclical markets out there. Some go up, some go down. And I want to find those ones that are on sale at the time. So I'm always making moves. I've bought properties every single year for the last 18 years since I signed my first contract. And I will continue to do so. So this year I bought 6 properties. It's a small year for Nathan. He only bought 6 properties, not 20 or 10 or anything like that. But what was big was that I bought, on top of those 6, I bought 30 motels, pubs, bottle shops, and even poker machines. I've got EGMs, which are electronic gaming machines, and I've got many different locations. I've got like 5 locations which are coming on the list with those sort of tradies laptops. So there's opportunities out there, and I will continue to be buying. So it's exciting. Gino, Birchie, what's your take on the China Evergrande impact on the markets? I talked about that beforehand. This video was all about that. So this is a bit old, the questions that I'm reading. Michael, the proposed lower borrowing capacity will increase middle and lower priced properties across the country. Exactly. That's what I was saying beforehand. So all the little cheapies will be pushed up. The stuff that I play in, the stuff my investors play in will go up. With the currency ready to die and the proposition of a new one, how will you positive debts transfer over to new currency? So as the currency dies, our dollar dies over the course of the next decade, my view is to sell off something. It might be even this pen, right? It's funny, the pen comes from A&P. I think I took it off one of my broker's desks because I was signing some shit while I was in the office beforehand. And it's a pen from one of my brokers over there. So if one of my brokers are upset they've lost their pen, you know where to find it? In my office. But that pen could be worth a lot more in the future, right? Just like my desk. My desk got paid $1,600. It could be worth, $3 grand, $4 grand today to get a similar desk. There could be a point where that desk could be worth $1 million, but it's not that the desk is any better. It's just that it's, lost its value. There could be a point where that terrarium in the background there is worth, $100,000, but it's because there's no value to the currency anymore. So there will be a point where I want to pay out my debt. My debt is becoming very, really, very, very irrelevant. Like if I've got some properties, I was actually looking at some the other day in some of the bank apps, and I'm like, I owe 60 grand on that thing. I remember when that thing was like, I felt I was going to go bankrupt for buying it, right? I remember buying property, each one, I'm like, fuck, wow, I really pushed myself to get this one. Like people might think, oh, I'm not in the right timing. It's not the energy doesn't feel right to go buy the property. I'll wait until Christmas is over. I'll wait until, the kids go to school or whatever the case may be. But every single time I've bought a property, right, and I could say for probably 80% of all the properties that I own, it's always been like, fuck, how am I going to make this one happen? How am I going to drag this one over the line? And it's been a challenge. I could have sat there and been like, oh, yeah, it's okay to buy it now, but there's always that sort of, pushing to get to the next level. So, when that, looking at the currency and the debt, my properties might be half paid off. Like there's nothing really, the debt level is really irrelevant at that point. So just have the assets. So what are the questions we've got here? Any other questions that are fun? DTI will only affect new loans, though, right? Existing owners will remain unaffected. Correct. If you've got a loan and it's all set up, they won't come back and say, hey, you can't do it. But yeah. It's only for new loans. So if you don't have a portfolio, you want to get your debt sorted. What other question? And Nathan, quick question. Would you rather have 100 grand sitting in an offset account against your principal place, or would you deploy this 100 grand into deposits for more investment properties and acquire more debt? Dana, I can't give you advice on that. I'm not a financial advisor. I'm not your financial advisor. I'm just a simple dude on the internet talking about some crazy stuff. But I would be looking at, if I had $100,000 in the bank account, which I don't, I'm always broke, right? But I know that every morning I wake up, I've got money flowing through my bank accounts, and cash flow is the key, not having cash, because the cash is losing its energy. It can't do as much as what it could. So for me, I would be investing into other assets that are bringing in cash flow. But my position is different to everybody else's. So work out what's comfortable. If you feel really comfortable with having 100 grand, have it against it. But I, for one, would be making that work and do a lot better things. I'm not here to borrow people's money, right? But I'm just going to use this as an example. You could have your money sitting there saving you, 3% against your mortgage and losing its purchasing ability, or you could have bought 100,000 paddle pops at $1 and now they're worth $2. So you could sell them off and pay out some of your mortgage. You could lend that $100,000. Let's just assume that I was borrowing it. I would happily pay 10% interest for your $100,000, and you'd make an extra 7% on it. But if I was borrowing it for 10%, what would I be doing with it? I'd be finding an asset that's going to provide even more money to it. So, you just need to work out, is that 100 grand best sitting there, or can you make it perform and do better things for you? And that's, I think there's a link in the description box here if you want to get a bit more strategy around your portfolio. Reach out to my team and they can help you plan and work out, put you in contact with the right people to discuss those sort of strategies. So I never sell either. Scott asks, silly question, how do I access equity within our home about 600 grand while the household income is low due to other income? I think I know the answer. We can't access it. Well, you sort of answered your own question there, but I'm like that little, I had tacos last night for dinner, and do you know that taco ad where they sell those kits with all the preservatives in them? The taco kid, the kid goes, why don't we have the taco that stands up? And they parade the kid around because they have the standing one, they have the folding one. I'd like to look at what's the alternative answer for that. So if it was me, and this is very important, I think this applies to lots of people out there, they go, well, I can't borrow, I can't buy shit, I'm stuck. I'm never happy with the answer. If I know I've got 600 grand equity, it's how do I get access to it? So it's a matter of breaking it down to its simplest form. So if you've got 600 grand equity, great. A lot of people don't have that, right? But if you can't borrow the equity, the question I would be asking my broker or my bank is, how much do I fail servicing by? They might say that you're failing servicing by $1,000 a month. You may be failing servicing by $2,000 per month. You may be failing by $5,000 per month. If you're failing by $5,000 a month, you need an extra $1,250 per week. If you are failing by $1,000 a month, you need an extra $250 a week. But without knowing that question, and I find a lot of people don't ask that question, without knowing that, you can't fix it. So if you were told from your bank or your broker, well, you're short X amount of dollars, then you need to find a solution to be able to find that extra income and then be able to fill that gap. So then the bank will lend you money. That can happen from you having to go and work and work yourself into the ground and get extra income in, which a lot of people do. Or it could be that you go and acquire another asset. You might have 100 grand sitting there. I am working on a couple of investors at the moment where I've bought properties for like 70,000, 75,000, which generate $300 to $350 a week worth of income, and that fills that gap. Or a couple of those properties might fill the gap, and then they can service again. And with that servicing, then you can purchase more assets. So it's important to break it down as to going, well, what does the bank require from me? Every time I've bought a property, it's not about the property that I want to buy. I never look at a property and say, hey, this is cool. I look at a property and go, okay, what is the bank requiring from me? What do I need to get to the next step of my journey? And then I find the assets going to complement that. So that's just my answer. And it's obviously no financial advice, just my thought on what I need to do. Mitch, what are your thoughts in building in the current climate? Accumulate properties with potential or capitalize on the build? Accumulate properties with potential. I'm not building shit. I've got lots and lots of properties that I own that I could be developing and building and doing that sort of stuff on, but I'm buying as much asset as I can. And a lot of the properties that I'm buying have got infrastructure in there so far greater than what I'm paying for it, people can't even rebuild it. So that's the most exciting part about it. Did I write The Matrix, offering people 2 types they could take? No, I didn't. I've watched it. The first one was cool. The rest of them were weird. There is a new one coming out, which is going to be interesting as well. Johnny, Nathan, your information is always invaluable. Appreciate that, brother. Hi, Nathan. Great advice. Thank you. Patricia Jones, great entertainment. Thank you, Patricia. Will interest rates ever go up to crazy times like 20%? When every currency crashes and when all the inflation occurs, there becomes an endpoint when interest rates do go up, but we're nowhere near that at the moment. How frequently should I revalue? Let's ask that question on this Wednesday's webinar. We'll have the whole team there. Hey Nathan, you're not a fan of the share market, but many advisors, even those that have supported, are still promoting them. How do you make the best choice with conflicting opinions? That's the important part, that even myself and my own people within the business have different views, but you need to do the right decisions for yourself. I think the importance as to why some of our advisors talk about shares depends on where you're purchasing them. If you're buying them under your personal name, you can do a lot greater. If you're buying them in a super fund, there's specific key metrics that advisors will give you because you need to have a part of liquid cash. So, for example, I'm going to have a glass of water. But if you've got, let's say, $1 million worth of debt and you've got 50 grand in a buffer, you could say, well, I'm going to spend that 50 grand on a buffer and go buy another property. Alternatively, you could have it sitting as cash, right? So you've got the buffer that's cash. You could buy another property, but then it would be illiquid. So if you had to get that cash, you'd have to sell the asset. Or you could put into shares. So if someone's trying to sell you shares because they think it's a great investment, well, I'd have to disagree. If they're using it as a bit of a ballast and a buffer, I have no money in my bank accounts. But if I needed some, I could go and sell some crypto. So I have access to liquidity. It might take me 24 hours or 48 hours to be able to get it as cash. Generally, it's pretty quick. You can get it, within an hour or so from selling it. What a great time we live alive. But, I don't want it as cash. So I don't leave it sitting there as cash. But it just depends. Like, it's the advice. And, you got to work with the best advice that suits you. But for me, I have no shares. I have no paper assets like that. Kane just asked, when is your seminar? The seminar will be on Wednesday. It's a webinar. Tune in and check it out. It's not on Facebook or any social medias. These webinars do not get shared out there. You have to specifically register. You can email my office at admin@binvested.com.au to register your position. Rochelle said, will they give us warning before the tightening of the lending? How far off is this? And do I think it is from happening? I think it's very, very close and kind of imminent for some people. It'd be worthwhile looking into that. But I don't know. They said it could. There's words that say could, right? So we don't know. But if it does affect, I think it will affect some markets. And some markets it will push up and some will, get softened. So Danny, sell, sold one. It's gained 70 grand since. Use that money to gain 250K. No brainer. Each property needs to be evaluated. Indeed, you need to work out what your strategy is. And, is that strategy right? Should you sell it? Sometimes sell properties. I've sold properties over the years. Out of the 6 properties I bought this year, 2 of them are probably properties that I will sell in the future and use to pay out debts on other properties. So you need to work out why you're buying that property for in the first place. And, is it going to keep going up, or is there a cycle where you'd go, shit, this is stupid, I'll sell out and forget about it. So you need to work out and assess that. For me personally, instead of selling properties, I like to go and pull out the equity and use that to purchase other assets, because then you don't have to pay capital gains tax and you still retain the asset and still see the growth in the future and still see the growth in the cash flow. So that's my 2 cents on it. But on that note, guys and girls, I want to thank you all for tuning in and spending your Friday evening with me. Appreciate the love, support, and wanting to be here. So on that note, if you need any help, you can reach out to us, admin@binvested.com.au. Hit us up 1300 367 925. I'll see you all on the webinar on Wednesday. If you want to get access to it, just email the team and we'll go from there. Thanks, guys. Keep being awesome. And yeah, you know my thoughts on the market, you know my thoughts on the financial system, and you know my thoughts on owning assets. Take the assets through the other side. Make sure you've got strong hands, they're not weak hands, and yeah, handing over all the potential. So catch up soon, guys. Bye for now.